Let's talk about real estate wins and what that looks like, and having a mindset as a seller to still win
Yeah.
versus being stuck in a pricing standpoint that was there during COVID and can't get that out of your head. And this is the second market that has had some swings that I've been in. Speak on that a little bit about explaining wins to sellers.
Well, I think it, goes back to, I know you hit on the pandemic, but during the pandemic, sellers were the only ones winning.
Yeah.
It was a one-sided game.
Hmm.
When we were talking to our buyers, hey, go over the asking price, and there was only a one-sided negotiation. Short-term memory again. And so I have my consumers, my customers, and kind of remember back when, or a normal real estate market.
Yeah.
When a normal real estate market on a 1 to 3% average increase,
Mhm.
maybe a 5-6% if it's great location, condition, priced correctly, what have you.
And that'd be annual.
Yeah,
Yeah.
annually. The 12, the 15, the 16, 18% increase, I hope we don't see that again.
Sure.
That was too much too soon, and that was because of the pandemic and everything. That's kind of an anomaly. A win though, think of renting a property.
Right.
What you would pay, you know, $8,000 a month, $10,000 a month, 5,000, $3,000 a month,
Hmm.
whatever price point you're renting something in. Add that up annually. Add that up. Everybody stays in their house in an average 7 to 8 years.
Sure.
Add that up.
Yeah.
It's hundreds of thousands of dollars that's gone, that you're not getting back. A win is getting the home sold at a good price,
Mhm.
at a good day on market,
Yeah.
and moving on and saying, "You know what?" Because you can't think, "Well, Joe down the street, and Sarah, they made a million, half a million dollars in 2 years, 3 years' time
Right.
during the pandemic." That's not gonna happen. That's not something that normally happens. Knowing that, hey, when we put the house up for sale, that we get customers that come in
Mm.
and see it, we get action, and we have a little negotiation and make some equity on it,
Sure.
and get it closed, and it's not sitting for days and days or a year or what have you,
Yep.
because that's when you're overpriced,
Mhm.
and that's when, um, so there needs to be a balance, and I think more than ever, if the consumers were hearing me, I would say, listen to your agent more than
Yeah.
ever and get it priced correctly, because if you're not getting showings and if you're not having people coming to see your property, more than likely you're overpriced.
Yeah, I heard, which really I think hits home when you do the calculations. If you launch your property and there's 0 activity, 0 showings, no calls, you're likely 8 to 10% over the market. And I've used this pricing triangle that shows if you're 10 to 15% above the market, you maneuver down to about a 30 to 10% of the consumers in that price point that would even potentially look at your property. And I think there's 3 types of listings. There's an accepted listing, there is a non-accepted listing, and there is an ignored listing. The accepted is you're getting a lot of activity in the beginning, probably going to sell in that first 30 to 45 days, 60 days. If you have an unaccepted listing, that you're getting some activity, some showings on it, but they're telling you that they don't want to offer. And then you have an ignored, which if you stay in that space for too long, you become completely ignored. And it's almost like you have to take a pause, maybe take it off the market, come back with a stronger pricing strategy. Um, because it all comes down to price typically, unless it's just a property that can't be replaced. I think there are some elite properties in our marketplace that the consumer has the money, they love the product, it's beyond anything else they can find. But those properties are rare. And
Sure.
if you're just looking at the typical market, let's just say interior homes along the 38 corridor, right? There's some beautiful homes, but there's a lot of them.
Yeah.
And if you're not getting the movement, it's not because of lack of marketing, it's because the market is just telling you that they are not accepting of your price. And I do think that finding wins for sellers again to say, hey, let's look at what happened for the 7 years that you owned the property prior to COVID. Now let's look at COVID, which you have a benefit for sure of pricing strategy that has elevated, which I don't think will come back down to pre-COVID time periods, but it has leveled out a good bit. But let's look at the whole 7 years combined, and then let's look at 2 years, and you can see where those numbers are off.
Sure.
And holding power is the difference. If you have holding power and you can hold your property, and if you're not willing to be a seller and do what it takes to be a seller right now, then you need to not sell your property and hold it long enough. And that may be 7, 8, 10 years from now, because it usually runs in 10 to 12-year cycles. And, I do think the peak was 22. It came down substantially in 23. It may be another, 5 or 6 years before you start seeing appreciation. But one of the things that hit home for me in the beginning of my career is I sold a Bayfront home, and they sold exactly what they paid for it. And they held it about 10 years. And I started doing the calculations, and they were, upset at the fact that it didn't go up in value. But then we did compute, what do you think you'd pay per month to stay in this beautiful Bayfront property? And at the time they said, probably around 7,000. So take 7,000 times 10 years. I'm like, you hit a home run. You lived here for free, had this amazing lifestyle, and you're getting all your money back. Imagine what you would pay to enjoy that lifestyle, not to mention write-offs and all the other things that you have. So I think it's all in perspective, right? Also, I see that the stock, the interest on CDs and money markets and different things, it's kind of coming down some, and that usually plays a role with people parking their money in real estate again and using it as a true investment tool. Not just the property, but the tax advantages that you have, the fact that you can rent a lot of these properties, the depreciation you can do,
Correct.
to enjoy it for your own personal satisfaction. Real estate, since the beginning of time, has been a great place to park your money, and if you hold it long enough, you typically win.
Yeah, you're right about the stock market and other markets. They're very volatile right now, and so people are moving them into the longer,
Right.
longer, tenor year, and real estate is a great thing to say, I know what it's going to do.
Yeah.
But going back to what really a win, looks like your example of your customers on your Bayfront home and having that money back. But I go back to the seller and to the customer and say, well, what's your why for selling?
For sure.
Are you selling because you're wanting to move somewhere else or upgrade? Do you really need to? Are you trying to sell because you're really wanting to make a bunch of money?
Right.
And then find out their why from the beginning. And that really,
So important.
that's so important.
Yeah,
So I
like,
think that's,
yeah, why are you selling?
yeah, because if you're selling to go closer to family, then we need to find a price point to get this thing done.
Well, the one thing you can't buy more of is time,
That's right.
right? And I think there's 3 questions that should be asked in a listing appointment. Why are you selling? Is there a price point? If all the boxes were checked, that would be an ideal pricing strategy that you would think of. And a lot of times it'd say, well, I was hoping you would tell me that. And for sure, I got all the comps, got all the stats to review that. Maybe ask it in a different way. What's a price point you would not sell for?
There you go.
Right? Because you got to understand that seller's limits. And even though you want to sell at the highest price possible, I mean, let's be real. We get paid more. They get paid more the higher we sell the property. But at the end of the day, you don't want to just be pretending to sell the property, because if not, it's a waste of income for that agent. There's no marketing that they can do that is going to overcome a bad pricing strategy. It's setting the wrong expectation with that seller. And if you can really get down to the nitty gritty of why they're selling that property and understanding where their limitations are, it's going to help you win for them. And then really look at the comparables. And I've had customers at times that said, hey, I think my property is worth $1 million and the stats are showing it's worth 800. And just ask them, can you share with me something about your home? Because you know it better than I do. That's going to allow us to price it 20% above the market. And then that's when I just show them that pricing diagram that I have. It's not rocket scientists. It's about movement, activity. And if you're not getting it, you need to be really thinking about a change quicker than later. Your best opportunity to maximize your price, in my opinion, is to come out the gate strong, get immediate activity in your property, because if you price it too high and you start chasing the market down over time, you just get a stagnant, ignored property no matter what you price it at. But I am I am hopeful and excited about the new activity, and I think that it will level up our market. But if there's a lot of people thinking that they're going to get just this immediate appreciation that they saw, we're 12, as mentioned, 12 years deep, and this is a kind of recycle time. I do think the prices are holding well, but um, sellers have to be realistic too.
Yeah. Yeah, the price to sold ratio has definitely moved up,
Mhm.
so that's great. But asking them the why also finds the motivation,
For sure.
finds the motivation of how motivated are you to accept an offer or to
Right.
price it correctly. So I think that's, very important to start that relationship. Ask those
Sure.
questions from the beginning.